Hello and welcome back to my channel. This video is about principles of bookkeeping controls. This unit is more advanced than the introduction to bookkeeping, so it's a little bit difficult, but don't worry, I'll be discussing more topics in the later videos, especially the most difficult ones. For today's video, I will be discussing the journal and irrecoverable debts. The journal is one of the books of prime entry, and this will be used a lot in the principles of bookkeeping controls. It is used to record double entries that cannot be recorded in any of the other daybooks. So what are the purposes of the journal? First is recording opening balances or entries, which is the beginning or the start of the new accounting period. Next is recording adjustments such as writing off irrecoverable debts, which we will be discussing later on in this video. Next is recording correction of errors in the general ledger accounts. In recording to daybooks or in general ledger, sometimes there could be some errors and they have to be corrected using the journal. Next is recording payroll transactions. And the last is recording other non-regular transactions. Some of the examples are recording bank loans, capital, which is the money invested or asset introduced by the owner, purchase or sale of non-current assets, depreciation charges, and adjustments of prepaid or accrued income and expenses. These are just some of the examples of the non-regular transactions, but don't worry, they are not included in the principles of bookkeeping controls. Now let's move on to writing off an irrecoverable debt. The debt that we are talking about here is the debt in the receivables, which is not likely to be received. It means among all the receivables recorded in the RLCA, not all of them will likely be recovered or paid by the customers. A portion of the receivables would be irrecoverable due to some various reasons, so when we write off an irrecoverable debt from the RLCA, this becomes an expense of the business. Now let's take a look at an example of irrecoverable debt. Invoice number 1089 that was sent to customer A has been outstanding for more than 6 months, and ABC Limited wants to write it off as an irrecoverable debt. Total invoice amount is 678. So these are the details of the invoice, and we will be writing off this invoice as ABC Limited has considered this irrecoverable from the customer. Remember, 6 months ago, this invoice was recorded into Receivables Ledger Control Account, VAT, and Sales Account. But now that we are writing this off, we won't be recording it to those same accounts. Remember, irrecoverable debt is now considered an expense, so instead of sales, the net amount will be recorded in irrecoverable debt account, which is an expense account. Now let's enter the details to our journal. First, let's enter the account. First, the total or gross amount will go to RLCA. Next, the VAT will go to VAT account. And then last, the net amount will go to irrecoverable debt account. Next, let's enter the amounts to either debit or credit column. First is the RLCA. RLCA is an asset and it increases in debit. However, we are writing off an irrecoverable debt. It means we will remove this amount from our receivables, so it will decrease our RLCA. So this amount should be in credit. Then let's go to irrecoverable debt account next. Remember, this account is an expense account, so the amount should go to debit. Next, the VAT goes with the irrecoverable debt, which is debit, because VAT always goes with the net, which in this case is the irrecoverable debt account. Next, don't forget to double check the totals of the debit should be equal to the credit. Next, let's move on to recording to the general ledger. Remember, the journal is one of the books of prime entry, so we have to transfer the details from the books of prime entry to the general ledger. First, let's enter the RLCA. Let's enter the amount in credit. For the details, it's irrecoverable debt and VAT. This is to show you the dual effect that this amount in RLCA is equivalent to the irrecoverable debt plus the VAT. Then let's go to VAT account. Let's enter the amount in the debit. And for the details, it's RLCA. Then let's go to irrecoverable debt account. Let's enter the amount. And for the details, it's RLCA. Next, we have to record the irrecoverable debt to the subsidiary ledger as well. Remember, since we made an adjustment to RLCA, we should also make the same adjustment to the individual customer account. In recording to subsidiary ledger, remember that we should record to the same side where we recorded the RLCA, which is credit. So now the balance in customer A's account is 678. Let's record 678, which is the gross amount of the invoice to the credit. And then let's write irrecoverable debt. This will zero out the total amount owed by customer A to ABC Limited. And that's it for this video. I hope you find it useful. If you want to watch more videos like this, please don't forget to give us a thumbs up and subscribe to our channel. Thank you for watching.